Morning, everyone. It's Ben Buckner and Dan Bosse with Ag Resource Company in Chicago. It is June 3rd, and welcome to what is so far turnaround Tuesday, at least in the row crop markets, which kind of makes sense. We think that sort of both sides of the marketplace kind of lacking fuel. So, the trend's been somewhat bearish the last week or so, but even the bears probably need some new information. Will the USDA's initial projected yield to be exceeded is probably the next question. That will be a function of July and August weather, of course. And also, I think quietly, crude oil has been adding some premium, and corn and soybeans, at least corn especially, kind of approaching oversold territory. So there may not be as much of a sort of negative bearish story, at least for the very short term. And so, Dan, what do you think? Will you break that down for us?
Well, I think that's right, Ben. I think as you look at the corn and soybean market, November beans at 10.10, December corn at, let's say, 4.30. I mean, we need to keep at least 10% weather premium in there with July, August ahead. So that makes sense. And then, you've got the Black Sea, which is still a question mark in terms of what's happening geopolitically between Russia and Ukraine. Will there be retaliation for Ukraine's a drone attack deep inside of Russia and the demolition of some very key aircraft that was there? So let's kind of walk through it here. So yesterday there was a big tweet last night about Trump calling the Biden's Green New Scam. He put out how he wants to, of course, advance the big, beautiful bill in Congress. But, I think going forward, the budget pressure on this bill is going to be immense. And so the cost side of it is going to be watched at as Trump is still promising, tax avoidance or no taxes on things like tips and Social Security and those kind of items. Well, he's got to have offsets. And so I'm concerned that offset may be within that 2021 Biden bill, of course, that includes things like 45Z. We'll see how this all falls together looking forward, Ben. But I think right now it's something to really watch, and maybe the reason why the soil market has really not been able to perform to the upside very well. The other thing, of course, we want to highlight is that the condition ratings improved in corn. Last week, we talked about the crop needing warmer temperatures. We did see that across the central and western areas of the Midwest. That did improve conditions in those states. So U.S. corn ratings are, inching back towards 70%, 69%, good to excellent. And then we got the initial soybean condition rating. And notice that we are well above the 5-year average. We're not at 70%. We're not like last year, but our impression is that both corn and soybean readings next week will improve again. So at least looking into the middle of June, we think crop condition ratings for things like corn and soybeans improve relative to the favorable weather that we have today. Again, July, August conditions unknown. That will be the yield determinant. Early yields determinations from condition ratings this in the month of June is very low in terms of an R squared. So we'll keep thinking about this and refreshing it for you going forward. A little bit about wheat. Wheat condition ratings were also up 52%, good to excellent. One of the things that keeps resonating in my mind is how cool the month of May has been across the plains and stretching eastward into Ohio, potentially Pennsylvania. So as you look at the one map to your right here, those are the departures from average for the United States during the month of May. And yes, coolness was the watchword for much of the areas in the Central Plains. Now, there's this correlation, if you will, between cool May temperatures and yields, HRW wheat in particular. So, the U.S. crop report's coming up on the 12th of June. We'll see where NASS comes out on this. But my lean would be, based on temperatures in May, that maybe that number is higher. Earlier on, Ag Resource thought that we'd see the highest yield estimates during the month of that May estimate. But now the May temperature profile has us leaning maybe a slightly larger crop, and the possibility that, the wheat market is seeing harvest ahead with a bigger crop. I still think it's tough to sustain a rally in July Chicago, much above 550 or 560 longer term. And I kind of see wheat in a trading range between 510 and 550, at least for the next few weeks. Talking a little bit about weather, it's a mixed forecast here this morning. As you see the departure from the anomaly precipitation map to your left, right, you can see that, again, dryness across the Canadian prairies, maybe the Dakotas, but other areas will be well watered. And we look at temperatures it doesn't jump out. Again, some coolness in the plains, variable temperatures elsewhere. And so at least for the next couple of weeks, Mother Nature looks rather kind, and that's why we expect condition ratings to generally improve. What's getting different and talked about this morning is this ridge of high pressure that you see here, 594 millibar high pressure centered in the south central Midwest, is going to lift the jet stream northward. Now that gets some rain to the Canadian prairies in the upper Midwest. The Dakotas hasn't seen much in terms of severe weather. This shift in the jet stream due to this ridge could do that. Now, we don't know much more about this ridge other than we probably will get what we call ring of fire rainfall through the Midwest, but it's the amplitude of the ridge and how long it stays anchored in this position, which will be key heading into late June and July. So again, the first morning we're coming back with a ridge in the forecast. I think that's one of the reasons why the corn and soybean market has bounced here on short covering this morning. Lastly, looking at the 3-month vol for corn, looking forward, notice the plummet here in the last, really the week. So corn vol is now at a 10-year low. So another indication to me that 530 December corn, at least for the moment, should probably hold. We can be bearish longer term, Ben, but with that vol break, it kind of tells me that there's a lot of bearishness in the market, and we should all be careful about selling it down here. Look for rallies, maybe 550 to 560. We'd love to see a rally back there to get sales on. But for now, I hate to be overly bearish of corn.
Yeah, it's all very, very good. I think you pointing out the first ridge of the season. So now the weather market starts, and we'll see how that evolves. And even this week, again, dollar gets you in 30 days. We're kind of looking deep into NOAA's climate history, and we found that it does seem like at some point in June, maybe the middle of the month, the trend does become your friend in terms of summer weather. So looks wet next 10 days or so, above normal rainfall for most places. But what happens second half of the month, I think it's going to be pretty critical in whether the markets kind of embark on this downtrend immediately, or do we need to add a little bit of weather premium into the middle part of summer? So it's going to be, I think, a pretty chaotic, wild market. So y'all have to be engaged in that. Yeah, so it looks like, choppy trade today. Looking at extended range weather forecast, that is the dominant feature from our end, at least. Dan, do you have any final comments before we take off?
No, everybody have a good trading day. I again, be careful about selling breaks here. We think we're at support. We always have some kind of weather rally, or normally have some kind of weather rally during the late June, July timeframe. Let's see if we can get one and give a chance to do some sales. I'm still longer term bearish, Ben, but a bounce here would make a lot of sense. Everybody have a great day.
Yeah, all the best. Bye-bye.